My good friend and the professional colleague, CA Sankaranarayanan, Dr. Dharmaraj, other organizers from Karpagam Academy of Higher Education, and the viewers of this program. Very good evening to all of you. Yesterday, we had an invigorating session on financial reporting by Chinnaswamy Ganesan, preceded by enterprising and enlightening address from Dr. Balaji, Dean of Karpagam Academy of Higher Education, and CA G. Ramaswamy, our own past president of ICAI. Today we have yet another important session on GST, recent developments and the forms related to GST. We have two eminent resource persons from our professional fraternity, CA V. Sankaranarayanan and CA Smith Kedia, to present an insightful and captivating address on the recent developments in goods and service tax and the related aspects governing GST. On behalf of Institute of Chartered Accountants of India and the Karpagam Academy of Higher Education, I am happy to welcome both the speakers. I would like to extend my sincere thanks to them for accepting our invitation and addressing about their respective topics. I also welcome each one of the viewers of the program for the second day of this faculty development program. Today's program would focus only on GST, since faculty role is very, very important to creating and shaping and molding the students for their employability. GST is one of the important area for the students to get job opportunity in various industries. As you all may be aware, the origin of goods and service tax way back in 1937. The nomenclature in the field of indirect taxes was later changed as VAT. Then new forms of indirect taxes came into being like service tax, excise, customs, etc. And now it is called as GST from 1st July 2017, encompassing all the types of indirect taxes into one single component, which benefits enormously to the exchequer of the state government and the central government in augmenting the financial resources to a very greater extent. I am happy to share with you that our Institute of Chartered Accountants of India has been conducting various workshops and seminars across the country, even before its implementation of GST, to enable chartered accountants, business community, and other stakeholders to be aware of its provisions. Most of the workshops conducted by ICAI received phenomenal response from the business community and other stakeholders. The organizers, therefore, thought it fit in an area of GST, and thus we have today's session on the subject to know about the recent developments and to keep ourselves abreast of the subject and the forms that are notified by the regulators from time to time. Your active participation and interaction only will make the webinar lively. I am very sure that the learned faculty members will empower you with their wisdom and knowledge on the subject. I hope each and every session of this week-long webinar will be very much useful to you and to fulfill our expectations. If any suggestions, kindly post in your feedback form, like your interest of topics. Also, you can mention topics related to the students. We are very much happy and associate with our institution for any kind of programs like this, workshop, seminar like this. If any doubts and questions for today's program, kindly post in chat box. We will answer all your queries and doubts after completion of both of the sessions. Now let me introduce the first session speaker to the viewers of the program. He is a chartered accountant cum cost accountant. He is a member of GST study group formed by the Institute of Chartered Accountants of India, New Delhi. He is an author and a contributor to ICAI for preparing and updating background material on GST. He is the speaker and a trainer for various professional institutes like Chartered Accounts, Company Secretary and Cost Account, and the government training institutes, including the Commercial Tax Staff Training Institute of Tamil Nadu, National Academy for Customs, Excise, and Narcotics of Chennai. ICD engaged in GST knowledge dissemination part of Niti Aayog initiative. So far, he has trained more than 1,200 chartered accountants and almost 4,500 plus finance and accounts professionals across India in GST. He is a member of Governing Council and the Secretary of International Chamber of Indirect Tax Professionals. With these few words, I am very much happy to introduce my good friend and a very, very simple and down-to-earth personality, C. Shankar Narayan, to the viewers. Thank you so much for this great opportunity. Now over to the speaker.
Thank you, sir. At the outset, thanks to the organizers from our side, the CA Institute, as well as the Karpagam Institute for Higher Education side, for organizing such an event and especially focusing it on faculties. And I should appreciate the faculties to take their time off on a Saturday evening, and it is going to be a week-long program. So that shows the level of commitment that we have towards enhancing our skill so that we can enrich the life of the students. So that is something which we can give back to the students. So hence, appreciate your effort of making it to the session. I'll hope that I'll be able to add certainly some value to your understanding of GST and certain aspects of GST which are not looked upon from a normal perspective. So with that in prospect, I think we'll move into the presentation. Now, the latest developments is what is the area that I'm supposed to have a discussion. But I would want to set a context in terms of what made the implementation of GST happen in the first place. So there were various reasons, the economic reasons behind this taxation. Because I am aware that the faculties who are watching this program are not just the taxation faculties. They might also be the accounting. They might also be the whole of the finance, business and commercial knowledge enriching faculties, where we will have to understand the basis of GST being introduced into India. It is easy to say that it's a taxation and taxation has come into place, but there is a lot of history behind it, which we need to explore maybe on a reverse chronological order. What happened in 2017 or 2016, I should say, which resulted in 2017 implementation of GST was 3 major amendments to our Constitution of India. Why 3 major amendments to the Constitution to bring about a tax? Was there not enough bandwidth in the constitutional provisions that were existing earlier to bring about the new tax? The new tax that was envisaged and brought out in the name of GST, there was not enough legal provisions existing prior to that. Why is that? Though India is considered as one country and as per the constitution we follow unitary system for our political purposes, but when it comes to taxation, we are a federal structure. What is the distinction between a unitary and a federal structure? Is that in a federal structure, the states are empowered to have their own legislations on aspects which are delegated by the constitution. So in our constitution, 7th schedule to the constitution talks about the union government's power to create law, list 1, and list 2 of the 7th schedule list those activities where the state governments can only create law. Taking refuge of this, the central excise, the erstwhile service tax that we had, as well as the state level VATs, all of them coexisted because the central levies were levied under the powers given under the list 1, union list. The state levies were continuing under the powers given under the state list, list 2. When GST was envisaged and had to be brought in, one levy, one taxation where the revenue has to be shared between the center and the state. This was not empowered already in the constitution. That is what led to this 101st amendment to the Constitution of India. This amendment, 16th September 2016, was notified. Thus, we saw the light at the end of the tunnel where we knew that GST is going to come. And there, the 3 important amendments, which out of the various amendments relating to GST, that one has to be aware of is introduction of 3 articles into the Constitution of India. Article 246A, 269A, and 279A. 246A, 269A brought in the taxability under GST with respect to intrastate supply and interstate supply. Any supply of goods or services is happening within the state. It is called intra. That intrastate supply is taxable with CGST plus SGST. So both the taxes will be there. There will be a central portion, there will be a state portion. When the same transaction, the supply of goods or services is happening across states, that was termed as interstate supply. Now, how do the interstate supply needs to be taxed? There is no differential rate. The rate is going to be the same. Mathematically, it is CGST plus SGST, but for the purpose of taxation, it is called as IGST, Integrated Goods and Service Tax. So if the CGST rate for a product is 9%, SGST rate for a product is 9%, the total tax is 18%. If you sell within the state, it is CGST 9, SGST 9. If I'm going to sell it from one state to another, it will become 18% IGST. So whether I sell within the state or I sell outside the state is not going to create a tax arbitrage. Meaning, buying at a low tax region, selling at a high tax region was not happening in India. That was ensured by GST, the first step. Why I'm talking about tax arbitrage? Because prior to GST, whether buying a product, paying CST, the central sales tax of the erstwhile regime, or paying VAT was a cost influencing decision. Because for CST, input tax credit was not available. But for VAT, input tax credit was available. So various people were trying to do their own tax planning mechanism. Some people stretched it even to the extent of tax evasion. That has been completely done away. Whether you supply within the state or from one state to another, it is a uniform tax. It is not one tax, it is one tax regime. So it is either CGST plus SGST or it is IGST. That was ensured. And how the decisions will have to be taken. Now, Article 246A, 269A has put in place the intrastate supply taxability, interstate supply taxability. How the decision making has to happen, because earlier, union government was deciding for its taxes, state government was deciding for its taxes. So the consensus has to be built. The consensus building and recommending to the government what needs to be done. A separate council was created under the powers vested under Article 279A. So under Article 279A, a GST council was constituted where all the state cabinet ministers, state finance ministers, ideally, if finance ministers are not able to attend, state can appoint their cabinet ministers to attend the GST council meeting. That constituted the GST council with the finance minister of India chairing the meetings. Now, that is how the consensus was built, and from there, they gave their recommendations. This is the start with which GST began. And even there, we had some interesting things to say about GST. When GST was introduced, it would be funny to note that we had 29 states in India when GST was introduced. From August 2019, Jammu Kashmir is no longer a state, so it has become 28. But when it was introduced, we had 29 states in India. But the state of the Union Territory of Delhi, the Union Territory of Pondicherry actually had a General Assembly, which means they had a chief minister. So what the GST Council had to do was 29 states, finance minister representatives were there, plus for these two union territories also, they allowed the finance minister as a representative, which meant that 31 people from the states were representative in the GST Council. So if I look at Article 1 of the Constitution of India, it will say 29 states. But for the purpose of GST, it is not 29 states, it is 31 states. It was 31 states, now it is 30 states. The reason was that it was the inclusion of these two union territories. Though they were union territories, they were having enough revenue, hence the GST took them into their fold. The union territory related taxation will happen in UTGST. The revenue will again go to the union government only. But when it is SGST, the revenue of the state will go to that state. Though they are union territories, these two union territories also had a share of their revenue. That is the reason behind the initial introduction of GST, wherein itself we are not able to easily decipher as to how many states are there. So we had to understand it with a legal interpretation and then provision. That is how GST's journey started. So the need to have a GST started way back in 1991 is what I would say, because GST introduced something called as a destination-based consumption tax. Any indirect tax is a consumption tax. There is no doubt, because if I am going to spend, if I am going to consume, that is when I pay the tax. In case of income tax, we pay tax because we earn. It is not about spending, but when we spend, we pay tax. That is why any indirect tax is called a consumption tax. Now that consumption tax, how it is going to be made as a destination based, and what way was it a game changer? Before introduction of GST, did we not have consumption taxes in India? Service tax, excise, VAT, CST, all were consumption taxes. But in what way GST was different? That we need to understand from a logical perspective, and then we will be able to appreciate the history from 1991. Prior to GST, let's say I am Hyundai Motors in Chennai. I am selling a car to a customer in Assam. What would my invoice carry as a tax? Since I'm a manufacturer, I would charge him an excise duty of 12.5% and I would charge him a CST of 14.5%. Because since he is a customer, he cannot give me C form. So there is no 2% taxability. So I have to take it to the rate of the local levy, which is 14.5. So in effect, if you see, there is a central tax of 12.5. There is a CST which will be collected by the state government and retained by the state government to the extent of 14.5. This excise duty went to the union government. This CST went to the Tamil Nadu government. This is how taxes happened before GST. Now, come GST, the same transaction happens. There will be an IGST of 28%. Now, this IGST will be shared 14% with the center and the remaining 14% with the state. Fine, looks the same. It is not the same. In GST, this 14% SGST will be shared with Assam, not Tamil Nadu. In the earlier tax regime, this CST of 14.5% was shared with the Tamil Nadu government, but come GST, the SGST portion of 14% is shared with the Assam state government. This is what is the tectonic shift in the taxation. From being origin-based taxation, we moved to a destination-based taxation. Center will get its 14%. State will get 14%, but it is not the state which initiated the supply. It is the state where the destination is. Assam is the place where it is getting consumed. Assam will get this. Now, why this has to happen? Why this was creating an issue earlier? The absence of this was because in 1991, we had our liberalization, privatization, and globalization. India was opened up. People came for investing. For the investors coming into India, India was one country. But little did they realize after venturing into India that every state had its own laws, especially taxation. So what happened at that point of time? Certain states who are the early birds were able to give benefits, give exemptions, give subsidies, and attract investment. Like, for example, manufacturing. Gujarat, Maharashtra, Tamil Nadu garnered most of the manufacturing industries. The multinational companies venturing into India. And when it comes to software, the erstwhile Andhra Pradesh and Karnataka did their bit in terms of attracting the investments. What it created is India as a market became marketable, but India did not grow in or at the same pace across India because some pockets like the northeastern region, or for that example, Kerala, or some parts of Andhra Pradesh, or even Madhya Pradesh, these states, since they did not attract the investment at the first point in time by tweaking their taxation regime, the taxes were not accruing to them. But the tax, indirect tax, specifically being a consumption-based tax, the consumption was still happening there. That is where GST is a great game changer and a leveler. The more you consume, the more tax your state will get. The more you manufacture, more tax your state will get was the old regime. The more you consume, the more tax your state will get is the new GST regime. So what it meant was states which were in the path of development, which are still in the path of development, the northeastern regions, the Bihar, where they were consuming, but they are still to get the complete industrialization. But to the extent of consumption, the state will get the revenue because of the GST model, which is the destination-based consumption tax. Does it not have a problem? Yes, it had a problem for manufacturing states, which is why Tamil Nadu, Maharashtra, and Gujarat were initially opposing the implementation of GST. But subsequently, when the numericals were shown to them and they were convinced that in terms of the numbers, the taxes will not go down. And even if the taxes go down from the existing collection, let's say for 2015-16, whatever was their revenue that they collected, being a state, from their state revenue, if that revenue is going to drop after implementation of GST, there was a package called as compensation to the states. This was given. Hence, for the first 5 years of GST, if the revenue of 2015-16 below that levels, the state government's revenue goes. Because of implementation of GST, the union government will give them a compensation to make it equal to their revenue of 2015-16 with the inflation adjustment. This was the agreement with which GST was implemented, and as of today, even for the state of Tamil Nadu, which was apprehensive for implementation of GST, they found that in the first year of implementation of GST, the state revenue did not go down. The state revenue, in fact, increased by 18%. The reason was that earlier, services was completely within the central's hold. None of the revenue of services was shared between the states and center. But come GST, services revenue also started being shared between the state and the center. That compensated for the manufacturing related collection that was there earlier. So this is how across India, the implementation of GST had to happen, and it happened with this revenue sharing modality. The change is that from an accounting perspective, we will never be able to see a change because we are just accounting and we are paying the tax. But what happens at the back end is more a state consumes, more revenue will accrue to the state. So it indirectly advocates an economic concept called welfare state. If a government wants to have more revenue, it's a harmony of interest, a cyclical thing to do. They will have to create employment. They will have to make the people in their state earn a living. If the people in their state are able to earn a living, the excess money that they have after satisfying their basic needs, they will be able to spend. If they spend that excess money, that spending of excess money will attract GST, and that GST will come to that state. So again, the government will have to reap the benefits of that revenue, and government will have to reinvest it so that they are able to create job opportunities, and it goes. So this is a solid, worked out, and a model which has been successful across 170 countries in the world. GST was taken up by India only after that. So this is the model which GST promulgated, which has brought in, and we are able to see the activities in GST going in that direction. And to give a perspective of GST implementation in India, the total population of India is 138 crores. Now, when we look at where all GST is there, we once had an interaction with the Australian GST authorities. They call it as Australian VAT. When we had a discussion with them in 2018, when they had come down to India for the Indian GST implementation study. So when we interacted with them, the question that I posted was, how long did it take for the Australian GST to stabilize? They said it was introduced somewhere in 1999. And by 2006, they went for computerization. And post 2008 only, we were able to stabilize. And they were happy that it had got stabilized from 2008. Now, in a matter of 2 years, their computer systems have got stabilized. They were able to do everything electronic. But that was only a piece of information. But when you add another piece of data to it, you will be seeing a startling thing. That is, the population of Australia is almost equal to the population of Kerala, which is one state in India. So if we are to look at 31 other multiplied by 31 is the number of people, number of businesses that are there across India, and we have seen 3 years of GST. We have had issues, but these issues compared to what they had faced, which had taken them 2 years to resolve, I think even if we take 5 years to resolve, it will be a massive success, because 138 crore people living country, implementation of one tax, implementation of one web portal. Later on, we will see the facts about the web portal also, which is the GST network. Having everything in one place, allowing people to access, is something which is enormous. Nothing the world has seen, and I'm sure nothing the world will be able to see in the future, because there is no other country apart from China which has got more population, more businesses. And in China, they don't follow this method. They have their own methodology, and there is no common portal. So across the world, nobody can match this traffic. Nobody can match this kind of electronic data interchange. That is what GST has managed to achieve. Now, there were certain aspects that need to be addressed, which the government started doing as a step after implementation of GST. Suppose I am a dealer in Chennai. I am sending goods to a person in Karnataka, let's say to the customer in Bangalore. Now, we had just seen that GST is a destination-based consumption tax. So ideally on this transaction, the tax should travel to Karnataka. There is a tax on this transaction which will be collected and paid to the government by the Chennai-based taxpayer, but the tax should actually travel to Karnataka to the extent of the SGST. How will Karnataka keep a track of it? Because a person in Karnataka receiving the goods, how will the government know that whether he has received the goods or not? That is where they put a control on the movements. This control on the movements is what is known as e-way bill. The intention of the e-way bill was to make it as a compulsory document accompanying the goods whenever the goods are being moved. It is not just a sale. It could be any kind of transaction where the goods are being moved from one state to another. It could be a stock transfer. It could be for job work. It could be for repairs. It is moving from one state to another. It is moving within the state, intra or interstate movement, whatever be it. When there is a movement, there will be a document which you need to raise. It could be an invoice. It could be a delivery challan. Keep the document, accompany that document with one more document which will be raised from a common portal called as e-way bill portal. If you raise it from there, I will always be able to know, I meaning the government will always be able to know that what is the movement and where is it going and why is it being done. And to that extent, have I got revenue is a check which I can do at a later point of time. Data capturing on a mass level happened in e-way bill, and it has been taken to an absolutely new level. And we will see very soon this concept of radio frequency identification device being introduced into the tracking of vehicles. Already, the vehicles which are procured in the last 3 or 4 years, you will be able to see a small sticker on the windshield on the left-hand side top corner, which will contain a code. If you can scan it, you will be able to find out the basics about the vehicle. That is going to be made mandatory very soon. Because of Corona, it has got delayed. Maybe from October or maybe from next April, it will be made mandatory, wherein all the transporting vehicles should have it. Now, why are they making it mandatory? Is because whenever the movement happens, it is not necessary for the department to track it. Whenever they say that I am traveling from Chennai to Bangalore, for that they have raised the e-way bill and they have given the vehicle number. The vehicle moves. The vehicle crosses the first toll where this number will be captured and they will be able to track. Having raised an e-way bill to go to Bangalore, are they going to Bangalore only or are they going to elsewhere? That can be tracked by this radio frequency identification device. Based on that, the vehicle can be intercepted by the officers. That is the extent that we are going to see in the days to come. Might sound like a James Bond movie, but what we have seen as a James Bond movie 20-25 years back have all been implemented in GST also, is what I would say. So this is not far off. This is going to be something which is going to hit us very soon in terms of the RFID tracking. The other things that this e-way bill mechanism has brought in is that it was introduced from 1st April 2018. They tried it on 1st February 2018. Due to technical glitches, they had to stop and postpone it by 2 months. So they knew that there was a problem, but they corrected the problem in 2 months. They came back. 1st April 2018, it was introduced and it was made mandatory for interstate movement. 16th June 2018 onwards, it was made mandatory for all the intrastate movement. So you move from one state to another, you are held accountable on the first instance. Then they said, why not track even the intrastate movement? Let's find out why at all a person is moving the goods, if at all he is moving, for what purpose. So the intrastate movements were made mandatory and available in the website from 16th June 2018. And they were able to see the success of it. So what they did, from 2nd December 2019 onwards, they said, if you are not filing your returns continuously for 2 months, I will block your e-way bill access. Which means, without filing the returns to the department, if you file the returns, you have to pay the tax. Without filing the returns and paying the tax, you will not be able to continue to do your business legally. You can move the goods, but you will not be able to raise an e-way bill. That restriction was brought in from 2nd December 2019. And from 16th December 2019, they reached a huge milestone. 100 crore e-way bills were raised from 1st April 2018 till 16th December 2019. And in India, we see various methods because there are people who take it in their stride to comply with the law. And there are people who are hell-bent on finding out the methods to overcome the law, not in the right sense. So what happened when e-way bill said you have to give the vehicle number mandatorily, whether the movement was happening or not, they were giving some vehicle number. It could even be their two-wheeler number. This was a popular kind of fraud that was happening. So how the department planned to control it is they integrated the e-way bill website with the Vahan system of the RTO office. So now if I am going to type two-wheelers number, they will be able to know that it is a two-wheelers number that person is doing. And in Karnataka, it was introduced way back. Karnataka, in this aspect, has been a front runner in terms of technological development. They had e-Sukam which is equivalent of e-waybill even before in the VAT regime itself. So they had tested it and they were able to see the benefits of it, and that is now percolating into across India. But due to this COVID again, the movements tracking and system, the implementation of the system has got slightly delayed, but the integration has happened. So if I give a transporter's vehicle, department will be able to track whether in that vehicle only whether they are moving it or not, or they have just given some vehicle number and doing it in some other way or not moving at all. There could be a fraud of bill trading. All that will easily get captured, if not today, in the days to come, through the electronic methods, which is what is the another key highlight. And looking at the statistics of e-waybill, which is staggering. The number of e-waybills raised as up to 31st of March 2020, which is 2 years since implementation of e-waybill, is 118.58 crore e-waybills have been raised. This will look like a number. Okay, fine. What is the big thing? On an average, 16.24 lakh e-waybills are being raised in a day. 16.24 lakh e-waybills. Okay. What is the message? The message is the maximum traffic that the Indian Railways portal can take for a ticket booking in a day is 13 lakhs. We book online, whether through the counter or whether through online, through the IRCTC website, whatever does, the electronic ticket booking, including the suburban and all the booking together in India, does not exceed 13 lakhs. But GST portal is able to support 16.24 lakh per day e-waybill generation. Imagine, it is bigger than the railway reservation system. Indian railway system, Indian railway related ticket booking is considered to be the biggest in the world. And now we have unsung hero, which is GST portal, the e-waybill portal, which is bigger by at least 25% compared to the railway reservation system. That is what has quietly happened. And the another thing to be proud about this e-waybill system is it is developed by our own National Informatics Center, NIC. So if you see the e-waybill website, you will be able to see e-waybill.nic.in. They have developed it in-house and they were able to be successful in this last 2 years, and the success continues because as the days go by, the technology only improves, the methodology only improves. In the days to come, as I said, the Vahan or other restrictions will be certainly able to curb a lot of other scrupulous activities that can happen. And GST has settled in terms of the rates, wherein the rates are these. Why have so much of rates? Always there is a push and pull from the states. So finally, these are the rates that are settled, and we are experiencing these rates only, where the 12% and 18%, that is where you will see a lot of 81% of the items are below this 18% or up to 18% only. The reason being, that is the revenue neutral rate. The rate at which if the department is able to collect the tax, they will be able to meet out their expenses. The government's expenses, what they expect in terms of the revenue contribution from GST can happen if it happens at 18% or 12%. So most of the items will be residing in that 18 to 12% category. Remaining are distributed to 5 and 3 as well as on 28. About 31 items are there in the 28% category. So this is how the rate structure looks like in GST. The registration limit, the micro industries, have they been killed by GST? Absolutely not. The registration limits have been set at some level in the first stage, and 2019 there was an amendment. So in the process of GST's last 3 years, GST was able to adapt to it, and it said, if you are only going to be a goods supplier, only goods, you should not do any service, then the registration limit is 40 lakhs. If you don't cross 40 lakhs, you don't even have to get registered. Don't even have to become a GST assessee. But if you're doing services, then the limit has been fixed at 20 lakhs. So if it is purely a goods supplier, 40 lakhs, a service provider only, 20 lakhs. Sir, I'm a goods as well as a service provider. Then you will have to come to the realm of 20 lakhs. In case of a goods supplier, if you are going to do interstate supply, one state to another, 40 lakhs doesn't apply to you. You have to get registered right from the first rupee of turnover. That is the restriction that has been placed. And moving ahead, for small businesses, what is it that GST has done? It has given a scheme under which if your turnover is going to be below a certain limit, the rate of tax that you are going to pay for your goods is only 1%. Imagine, as against 18% or 28%, we are going to pay only 1%. And if it is going to be a service, and if your threshold of turnover is going to be below a certain limit, we are expected to pay only 6%. Now, that is what is called as a composition scheme. If the turnover is going to be lesser than 1.5 crores or not exceeding 1.5 crores for a person who is dealing in goods, he needs to pay only 1% as tax, 0.5% CGST, 0.5% SGST. On the other hand, if you are going to be a service provider whose turnover is up to 50 lakhs, 0.5 crores in a year, then you can opt for this composition scheme, wherein you don't have to pay 18%. All you need to pay is 6%. So the micro industries were taken care, the small and medium enterprises are taken care in GST by enhancing this limit, because when GST was introduced, services related composition was not even there. And for goods related composition, the turnover limit was fixed at 1 crore, which has been enhanced to 1.5 crores to cover all the assessees who are having turnover up to 1.5 crores in a financial year under this special scheme benefit of lesser rate of taxation. The other interesting fact, which has been startling right from day one for me, is that when GST was introduced, the migrated assessees from the old VAT, old excise, old service tax, people were migrated into GST. We had about 58.47 lakh assessees who had got migrated to GST, who have been doing business as on 30th of June 2017, migrated into GST 1st of July 2017. If GST is bad, if GST is not generating the kind of revenue, if it is not enhanced the tax base, I'm not able to understand the statistics, because as on 30th of June 2020, the number of registered assessees in India is 1.23 crores, which is more than double the number of assessees who were there on 30th June 2017. Where is 58 lakhs? Where is 1.23 crores? It is more than double of the number of assessees in a span of 3 years. In 3 years, the tax base has doubled. Now, this compels a question: was these additional assessees, were they not registered earlier? Were they not doing business earlier? In either way, GST has been successful, because if they were not doing business earlier, they have started doing business after GST. To that extent, GST has managed to capture them into the tax net. If they were not paying tax earlier, they were not registered, GST has forced them to get registered. Either way, the tax base increases. In economics, we say when the tax base increases, we'll be able to collect taxes from less tax from more people, is a better taxation regime, rather than collecting more tax from less people. So this is another success of GST, is what I would say. In terms of 3 years, doubling the number of assessees, even more than double of the number of assessees whom we had earlier. And is GST really a bad tax? Has it contributed to increase in prices? A quick numerical discussion on that. As faculties, you will be able to appreciate it. I'm taking a simple value chain. A manufacturer 1 is supplying to manufacturer 2, and he is supplying to a dealer, and the dealer supplies to the end customer. Before introduction of GST, look at the scenario. Manufacturer 1 is selling it at 1,000 rupees, and he is charging an excise duty of 12.5%, and he is adding a VAT. So the product is available to manufacturer 2 at 1,288. The excise duty of 125 will go to the central government. The 163 rupee of VAT will go to the state government. Fine. Now the product goes to manufacturer 2. For manufacturer 2, he knows already, though he is paying 1,288 rupees as tax, he is entitled to take input tax credit for a central tax, for the state level tax also. So he will consider his cost to be only 1,000. He does his value addition to the extent of 200. He will be able to come to the next step, wherein he will also have to sell his product. He is ready to sell it at 1,200, charging an excise duty of 12.5%, 150, as well as a VAT of 196 rounded off. He is able to sell it at 1,546 to the dealer. Now, what is happening here is that this manufacturer is going to collect 150 rupees of central tax, but he will not pay 150 because he has got input tax credit of 125. So he'll pay only 25 rupees to the central government. And from a VAT perspective, he would have collected 196, but he will pay only 33 rupees to the state government, which is understandable because he is entitled for input tax credit. But the third level of this transaction is where the earlier taxes had a problem. Now this dealer is buying the product, paying 1,546, but the cost is 1,200. The taxes are 150 and 196. But unfortunately, in the old tax regime, a dealer was not entitled for excise duty input tax credit. So what this dealer was doing was he was charging, including that excise duty. So he was not considering 1,200 as his cost. He was considering 1,350 as his cost, as you can see in the screen. 1,350 he has taken as his cost. He expects a value addition of 10%, ready to sell the product at 1,485. And it goes to the end customer, which is you and me. We paid a VAT of 14.5 and we said, okay, we are paying VAT of 14.5. The product is coming at 1,700. Imagine a product which we purchased for 1,700, we thought only 215 rupees is inside there as tax, because that is what we could see in the invoice. 365 rupees is sitting inside as tax, because the dealer is entitled to take input tax credit of VAT, but he is not entitled to take input tax credit of excise. So excise became a cost for him, whereas VAT became a ITC. So 215 minus 196, rounded off 20 rupees, he pays to the state government. Totally what has gone to the government is 365 out of 170 rupees. This is, sorry, 1,700 rupees. This is what was happening earlier. Now, how did GST change the whole proposition here? The same transaction, by introduction of GST, I'm assuming that the tax rate of the product is 9 and 9, 18%. Because as I said, 81% of the items are going to be sitting in this category only. This 9 and 9, 18%, what has it done? Same 1,000 rupees for the manufacturer one, tax of 90 and 90, selling price is 1,180. For manufacturer 2, there is no change, because earlier also he was getting input tax credit. Now also he is getting input tax credit. So he goes in for same value addition of 200 and he is ready to sell it at 108 tax added, 1,416. Now comes the most important change. For the dealer, earlier the central tax portion was an expense. Now for the dealer also, the central tax portion as well as the state tax portion is eligible as input tax credit. Ideally, the dealer should have taken this 1,200 rupees as his cost. Had he taken this 1,200 rupees as his cost, him making profit is not a problem. He can expect the same 10% margin. Add that, he will be able to do a selling price of 1,320, wherein we pay the GST, CGST, SGST while procuring. The cost of the product should be only 1,588. Now, did it happen? Were we able to do it at 1,588? Had it happened, compared to the earlier regime, 1,700 to 1,558, there should have been a cost reduction because of implementation of GST to the extent of 8.39%. Straightforward gain to the end customer. But it did not happen in some of the cases where there was a perfect competition. The example that I would take is car dealership. In case of none of the car dealers, we saw a price increase post implementation of GST. In fact, in some of the cars, there was a price reduction actually. And there was no citing of reason of GST being an increase in cost, because they knew that they had to pass on the benefit to the end customer, else their product will become non-competitive. Now, you might question my logic by saying, sir, you have taken 9 and 9, 18% as the tax rate. What if the product is coming under 28%? Even if the product is going to come under 28%, the final price to the end customer cannot be more than 1,700, which we saw in the earlier to GST regime. It is 1,690 only, even if it is 14 and 14, 28%. The taxes that would have gone to the government is 370, where they were collecting 365 earlier. They would have got 370, but still it should have been lesser. If not lesser, the cost should not have increased because of GST is the point. So the implementation of GST was not a problem. The way it was projected, the way it was reaching the end customer because of the final leg of the transaction, maybe the dealer, maybe the erstwhile dealers who are dealing in GST now itself, maybe that was the problem. That is the reason why in some of the cases where we saw increase in price, but that is also being curbed by way of extending the life of the anti-profiteering authority, where they are going to further investigate and they will be able to recover from the people who had collected such undue revenue from the people back to the government, and they will be able to give it back in terms of consumer welfare activities, is what the government has assured. But should GST be called as a tax which has resulted in price increase? I think I've given you the illustrations numerically to prove that it cannot be the case. Now, moving to the other aspects, the revenue control measures in GST, what is going to happen in the days to come is, which has been the latest development. Last week, we had seen that e-invoicing is going to be introduced. Any assessee whose turnover earlier they had fixed as exceeding 100 crores. Now they are saying if it is exceeding 500 crores, mandatorily from 1st October 2020, they have to give an electronic invoice, which means the invoice itself should be raised from the GST portal. If I am going to do a transaction, a B2B, business to business transaction, I will raise the e-invoice from the from the e-invoicing portal. My turnover is more than 500 crores. If I am going to sell B2C, let's take an example of a jewelry. I am a jewelry who is selling to a B2C. What am I expected to do? In those cases, the department is going one step ahead and they are saying it is not enough. You raise the invoice from the common portal of e-invoicing. You will also have to print a QR code in the invoice. What is the logic behind it? I'll tell you the logic the government is going to come up with. If I am going to sell B2B, business to business, obviously my invoice is going to become an input tax credit for the other person. So the government will be able to track how much I sold and how much he purchased from me. So if there is going to be a mismatch, they will always be able to zoom in on me for revenue control. If I am going to claim that it is a B2C transaction, how much I did, how will the government be able to know? They will not be able to know, but they make this QR code mandatory. And very soon you will see the government will come, the GST department will come up with a lucky draw scheme for the GST buying people. That is the consumers who are buying invoices containing GST. If I'm going to buy from a corporate who's having more than 500 crores of turnover, let's say the same jewelry example, I'll be able to see a QR code in the invoice. That QR code, they will ask me to scan and upload it in the GST portal. And that will be my entry. Based upon that number of entries that have come, they will do a lucky draw and they'll give me price. But do you think the intention is lucky draw? Certainly not. They will be able to see how much of such numbers have come. In that QR code, the GST number of the supplier will be there. They will track and find out whether this invoice has been reported in the return filed by that supplier. So whether I supply to B2B, where there is an instant tracking mechanism, if I supply B2C also, there is going to be an instant tracking mechanism that is going to come in the days to come. So this is what is the development prospectively, futuristically, that we are going to see from 1st October 2020 being implemented in GST. And the new returns that are going to come, the existing returns, my friend Sumit Kedia will be discussing in the next session. This is what is proposed by the government, where they are intending to curb it. The revenue control measure, as I said earlier, they want everybody to report in a certain manner. I think more than the contents of the return, what is intriguing to note for all of us is the government has come up with a huge benefit for the small taxpayers. In the last 1 week, the GST practitioners as well as the assessees would have seen a lot of mails coming from the department saying your turnover is, as per our books, it is lesser than 5 crores, or your turnover as per our GST portal is more than 5 crores. Why are they saying it? Because when the new returns are going to come, the assessees who is having turnover below 5 crores are going to be given an option to file returns on a quarterly basis. As per a white paper on returns published by the GST Council way back in 2018 July, they have said 93% of the taxpayers under GST are lesser than 5 crore taxpayers, meaning their turnover is lesser than 5 crore. People are constituting 93% of the total taxpayers who are filing the returns. So they want to give them a huge benefit, which is don't file monthly return, file a quarterly return. Hence, they are trying to now ascertain who are all those assessees whose turnovers are up to 5 crores or above 5 crores. That method, that working has started for this purpose, as well as the other purpose in GST. So anybody whose turnover is up to 5 crores will be called as a small taxpayer in the days to come in the new GST, where this small taxpayer has an option to file different types of return. If I'm going to purely be doing a business between B2B, then I'll be filing this RET1. But if I am going to be only dealing with B2C, let's say I'm a provision store, I want to do this, then I will be able to file RET2, Sahaj is the name of the form, which is going to have lesser compliances. If I'm going to be, like I say, hardware store, where I'll be doing B2B as well as B2C, they are going to give me a new form, RET3, where the relatively lesser data compared to RET1 needs to be filed by me, and I need to file it only on a quarterly basis. And is this going to be a compulsive thing for them? No. They can choose even to file on a monthly basis if they have the bandwidth to accomplish this work. This is what is going to happen from the new returns that are going to come. So the small taxpayer threshold itself is going to be increased to 5 crores. Another positive sign. And looking at the technical highs, what GST has managed to achieve in the past, as on 3rd of August, all the statistics that I have put in as numbers here are all taken from the Goods and Services Tax Network website. So it is not a number which I have managed to get on my own. All these are available in the public data, public domain for anybody to see. Now look at the staggering numbers that we are able to see. The number of e-payables which are raised up to August is 131 crores. We saw as on March 31st, it was 118 crores, 131 crores, even during this period of Corona where we had lesser transactions. But still, that is the kind of number that we are seeing, staggering. 938 crore invoices have been uploaded. B2B transactions, export transactions, when people upload their invoices for the purpose of filing of GST returns, 938 crore invoices have been uploaded. The bandwidth of the website to absorb this kind of data, and the payment transactions of GST, how much payments people are able to make through GST. It could be a small of 100 rupee payment of tax, or it could even be crores of rupees of tax. But the number of payment transactions that have gone through the website is 14.58 crores. And these are all the statistics which again reiterates the point that GST as a portal has been, yes, there have been problems and glitches, but what we had seen in the implementation of GST is the problem that we faced earlier, both from an economic perspective, which is the revenue sharing across India, whether it is happening according to the consumption taxes basis, that had to be overcome, and how everything can be brought into one place, and where in one place we will be able to see all the data, so that the mechanism of control of GST related activities, how the officers will be able to do, the executive mechanism, how they will be able to accomplish, that also had to come in one place. And then we had to have revenue control measures after GST was implemented in terms of e-way bill and the e-invoicing that we are going to see. All this, the electronic measures, the digital way of doing has managed to achieve so many things. And GST as a tax yielding source for the government has also not let down the government in terms of the tax revenue that has been regular and which has been going on and on for the last 3 years. I think that is what is the note on which I will conclude my presentation. So what I had so far presented is only the 3-year report card of GST and what is lying ahead for us in terms of GST that we are going to see. And I'll be able to take questions maybe at after Sumit finishes his presentation. I will log in again and I will take the questions at that point in time. Thanks a lot for being patient audience, and I should thank the ICAI as well as the Karpagam Institute for Higher Education for giving me this opportunity to address all the learned faculties. Thank you all for your time. Thank you.
The essence of all beautiful art is gratitude. Respected CA Shankara Narayanan sir, our valuable invited guest, dear academicians, it is my privilege to propose my heartfelt thanks to him for such an in-depth introduction on GST. Sir, you made this day more productive. Once again, on behalf of our Karpagam Academy of Higher Education and ICAI Coimbatore chapter and all participants, I register my sincere thanks to you. And we have awesome CA Jalabadi sir with us, Vice Chairman, Southern India Regional Council, and for welcoming our guest, invited our guest, CA Shankar Narayan sir. Thank you very much, sir. And it is my privilege to welcome next speaker of the session, Sumit Kadia, FCA. Sumit Kadia is a practicing chartered accountant and a partner at AK Lunawat Associates, specializes in indirect taxes, particularly GST. Is presently advising a portfolio of clients from automotive, auto ancillary, ITES, construction, infrastructure, education, entertainment sector. He has carried out GST impact study, implementation, and training for various public sector undertakings and other corporates. He has authored a comprehensive book on GST and annual return, and also on key implications of GST on financial statements, which was released by Sri T.N. Manoharan, Chairman, Canara Bank, and Sri K.M. Ravichandran, Commissioner GST and Central Excise. He is associated with the Institute of Chartered Accountants of India as a resource person for CPE program, GST certification course, and also as a faculty member for educating CA students. He has addressed more than 200 seminars on indirect taxes at various platforms, including ICMA, FICCI, Comptroller and Auditor General of India, Defense Training Institute of Government of India, National Academy of Customs, Indirect Taxes and Narcotics, Central and State GST Department, Service Taxes and Central Excise Departments, Large Taxpayers Unit, International Chapter of Indirect Tax Professionals, Chartered Accountant Study Circle, Society of Auditors, universities, trade associations, etc. Sumit sir is a major member in various professional and other forum, and is an executive committee member at Tamil Nadu Economic Affairs and Taxation Panel Committee of Confederation of Indian Industry. He has contributed articles in various professional magazines, including Chartered Accountancy Study Circle, Industrial Outlook magazine, and International Physical Association. I am very happy to introduce him and welcome him for delivering his speech on introduction to GST and forms of GST. Welcome you, sir.
Thank you, sir. Thank you. Can I share my presentation and start, sir?
Yes, sir. Yes, sir. You can, sir.
Yes, sir. So my slide is visible, sir.
Yes, Smith. You can proceed.
Okay, done. Yeah. So a very good evening. So I think my friend, good friend Shankar Narayan had highlighted various aspects of GST, how GST came into force, what are the important provisions in GST, and closing with a very good statistics of how GST has panned out in the last 3 years. Now, what am I going to cover here is I'm going to talk about the forms in GST. Now, if you see, although GST was being touted as a good and simple reform, since it was a new law, altogether a new law, earlier we had various taxes like central excise, sales tax, etc. Since the 17 types of taxes were subsumed into one law, GST, no doubt in a country like India where we have no huge tax base, it can cause various hardships. So similarly, when the GST came in, there were a lot of challenges faced by taxpayers. The government also continuously made amendments, changes to the law to make it simplified for the taxpayers. But since it was altogether new law, we had a lot of hiccups, a lot of forms were introduced, not to streamline the provisions of GST. My good friend had given you a statistics that during the time of implementation of GST, there were around 58 lakh registered taxpayers. But if you see today, we have around 1.2 crores SSCs registered under GST. So just see the quantum of work which has increased for whether you say for accountants, for professionals, or for chartered accountants. Because before 1st July 2017, there were only 60 lakh taxpayers. Now it is 1.2 crores, so it's almost doubled. So just imagine the quantum of work which has increased for accountants or professionals or chartered accountants. And that here comes the importance of GST for especially college students or those who are doing BCom or those who are looking their career in the accounting or finance field. If you ask any corporate whether they are able to easily comply with GST, one word they will say is, prior to GST, example, they had only 2 people in their accounts department handling the compliances. But post GST, their manpower had to be increased from maybe 2 to 3 or 2 to 5 because of the increased compliance in GST. No doubt government is making a lot of efforts. Slowly the compliances will also stream down. But in majority, during our practice, our practical exposure, we come to know that many corporates are saying that the manpower, the accounts of finance team has increased phenomenally because of GST, because of the number of compliances, certain new forms which have been brought into GST. I will take you in detail in these forms, something called as GSTR 2A. Now government is bringing GSTR 2B. So there are numerous forms because of which compliance have increased in GST to a greater extent. I will take you through my presentation. What are those forms because of which there's a steep increase in the compliance, in the day-to-day compliance of the various companies or SSCs registered under GST. Hence, what I'm trying to say again and again, this is because there is a lot of scope for accountants or chartered accountants. Now, let's say example, if a student studying in college, let's say if his example is doing a course, Post qualification, post his graduation, he's unable to pursue CA for any reasons. Even in accounts field, there is a lot of scope in GST. As I said, the demand for accountants have increased phenomenally after the implementation of GST. I'm sure any professional will vouch this view because, as I said, the demand, the requirement, the compliances have increased after the implementation of GST, and hence there is a lot of importance given in GST law. Also, another reason, earlier what happened in sales tax law, let's say example, I'm having a turnover of 4 crores or 5 crores. I was registered earlier under VAT law. So I had to file only one return per month. So, and I have been doing from various years. So in small businesses, the owners, the business owner themselves used to do this compliance. They used to sit and file their VAT return. It really used to happen prior to GST that in case of VAT, small vendors, small business owners used to do their compliances themselves because it was fairly simple and it was practiced since very long, so many years. So people had been used to this compliance. Now, what has happened in GST is, since it is altogether a new compliance, lot of amendments coming on day in and day out. Even small businesses have outsourced the GST filings to either accountants or professionals or chartered accountants or cost accountants. Because since law is evolving, there is a lot of caution required because in GST, we cannot even revise our return. Once the return is filed in GST, we cannot revise the returns. So extra caution is required by filing those returns. So many even small businesses, what they do is they outsource their work, outsource the GST compliance, GST filing to either part-time, or they hire a part-time accountant, or assign it, outsource it to some other accountants. So that is the reason, because of GST, the work and scope compliance have increased phenomenally post the implementation of GST, thereby increasing a lot of works for accountants, finance professionals, and chartered accountants. Now, with this brief introduction to say why these forms are so important, because when we talk about compliance, the immediate word which comes into our mind is forms in GST, because the various compliances are being dealt by various forms. So we have to file monthly forms, monthly returns. Now, let's say example, it starts with registration. Let's say my turnover is 15 lakhs. My friend Shankar Nanan told that if your turnover exceeds 20 lakhs and if you are a service provider, you have to register under GST, mandatory. So now if I cross my 20 lakhs turnover, I need to get registered under GST. So again, I need a help of a chartered accountant or an accountant to get myself, to help me or to assist me in registering my GST number. So to get me a GST number, various compliances. Example, when I get a GST number, I should display that in a prominent place in my office. So the moment I get registered, various compliances start in. I have to start filing my monthly returns. Once I do my monthly compliances, I have to do various reconciliations between various forms, which I will take you through in some time. Also, we have to do annual filings also in GST. So there are numerous compliances which triggers in the moment we get registered under GST. So let's go across and see what type of forms and what type of compliances we have in GST law. Let's first, I will highlight certain forms, whether in registration or we are talking about how to apply refund in GST, etc. And then I will go in the main compliance forms, which is basically returns under GST. So thereby, first I will try to cover on a broader aspect the registrations, refunds, etc. Then I will go a little more detail on the return forms under GST. First, talking about registration, as I said, the moment I cross my threshold registration, I will have to mandatory get a registration. So I will have to make an application for registration by GST REG 1. Now, before that, let me mention that the majority compliances in GST are online. It's all digital. Only very minimal provisions are manual. But barring that, majorly all forms, all compliances in GST are digital, online. There is no physical submission required at majority of the places. So if I want to get registered, I have to submit an application online. See what used to happen in the earlier regime. In the earlier regime, in the VAT law or excise regime, When I apply a registration, what used to happen, the department officer will also come and visit my premises. I will have to submit documentation. So there were a lot of manual compliances also in the earlier regime. In GST regime, there is no physical submission required for getting a registration. The form which I'm talking is REG1, the first form if you see in my slide. In REG1 registration form, I will fill all the basic details. I will upload my documents. Let's say example, rental agreement. Let's say example, I want to get registered. Let's say I'm an accountant, BCom graduate. I want to start my consultancy, small office to file returns for small businesses. So to start my office, what I do is, let's say I cross 20 lakhs turnover. So I want a number. So to get a registration number, I will have to upload certain documents. Let's say, like example, my KYC document, my photograph, my address proof, my ID proof, my rental agreement to prove the authenticity of the place from where I am doing business. I will just give a example or reason why this is required. See, in GST, many might be aware that almost every other day we see that someone have got arrested in GST law. Someone has been arrested because of issuing fake invoices, taking dummy credit in the GST law. So in GST, a lot of arrest or a lot of issues are happening. So government wants to ensure that there is genuine business being done through GST. There should not be any fraudulent activity. So proper documentation is required. So when I apply registration, I have to upload a rental agreement. The rental agreement from the place from where I am doing my business. And the landowner who is entering into a rental agreement with me, his proof is also required to substantiate that he is the owner of this property. So EB challan or property tax challan, such proof is required to be uploaded. So with these basic documents, we have to upload our registration through REG1. Once you upload registration, you will get an acknowledgement by REG2. As I said, there is no manual process, all online. So I get an acknowledgement, and then the REG certificate, registration certificate comes in form REG6. That is the registration certificate. Just like we have a driving license certificate or a birth certificate, we have a GST registration certificate. So this certificate says that yes, I am registered with so and so registration number. Now, REG16 is something like cancellation. If I want to cancel my number, let's say I'm discontinuing my business, so I have to cancel my number. For that, there is a form called as REG16. Likewise, we have numerous registration forms, REG 1, 2, 3, 4, etc. I have just highlighted the importance of few forms for registration. Now, let's say example, I am registered in Chennai. I have a branch in Chennai. In Tamil Nadu, in Chennai, I have a registration office. I said I'm an accountant, BCom graduate. I start my own office. Now, let's say I'm prospering in my business. I'm getting more customers. So I open another branch in, let's say, Salem in Tamil Nadu. And there also I cater to certain customers. So that place in Salem also needs I can add that Salem office, my own office in Salem, my branch office in Salem, to my existing registration. How I will do is I will add that place as an additional place of business. I have another option. I can take a fresh registration. Although I'm the same for that branch also. Under income tax, I have a single PAN, but I have an option under GST to take a separate number, separate registration for my branch in Salem. So if I take a separate registration for Salem, then for the purpose of GST law, I will be treated as two distinct persons. So I will have to file separate returns for my Chennai office, separate returns for my Salem office. Because although for income tax provisions, I'm a single person, but as per GST, I become two distinct persons, one in Chennai and other in Salem. So separate returns to be filed. Now, let's say if I expand further. Now I get certain business, some return filing business in Pondicherry. So I want to open an office in Pondicherry in my name. So now, if I open a branch office in Pondicherry, I do not have an option to get a number. I have to mandatory get a number. I repeat, I have to mandatory get registered in GST, because every state I will have to get mandatory registered, because as my good friend in the previous session is highlighted that state-wise GST is there. Every state, no, the allocation of taxes go to the respective state government also. GST is a consumption destination based tax. So on those logics, I will have to get mandatory registered in Pondicherry. Within same state, if I have a different place of business, different premises, option to me either to register separately or not. But if I'm registering, I'm opening an office in another state, then mandatory I have to get registered in the other state and follow GST compliances. As per GST law, if I'm the same owner, same PAN, but if I have two GST number, for the purpose of GST law, I'm treated as two distinct person. Now, why I'm highlighting all these provisions to understand that, to drive home the point that this will increase multiple compliances. Because in my case, let's say a taxpayer has a branch office in Chennai, another branch office in Salem, another office in Pondicherry, and he has 3 registration numbers. Then his consultant, his accountant has to file returns for all his 3 offices, one in Chennai, Salem, Pondicherry, thereby increased compliances. So that is the reason I said the compliance have increased phenomenally. So you will have to do a lot of compliances. Unlike our earlier service tax regime, which was a centralized law, in GST, you will have to file returns separately for every registration, because every state mandatory different registration has to be obtained. So if I have 3 registrations, same PAN, same owner, same proprietorship, still I will have to file, do separate compliance, separate forms for each and every registration. So this was all about a brief about registration forms and the compliance therein. Next, coming to the forms in refund. See, many times, some would have read in newspapers that a lot of refunds are struck with the department. Just like we get refund in income tax, similarly we have refund provisions in GST law also. I will just give you a few examples, and then I will take you what forms we have in refund provisions. See, example, let's say I do export of goods. Now, government wants to encourage export, right? So when I export goods, let's say example, I have an order. I'm in India. I have an export order to Singapore. So when exporting goods to Singapore, government treats this transaction as zero-rated supply. There is a specific section 16 in IGST Act, which says export of goods will be treated as zero-rated supply. Now, what is this zero-rated supply? Zero-rated supply is something which is taxable at the rate of 0%. I repeat, zero-rated supply is something which is taxable at the rate of 0%. 0% is also a rate of duty. I repeat, 0% is also a rate of duty. So if I export goods to Singapore, government wants to give me benefits and incentives. So if I export goods to Singapore, then for that, I can claim refund. How can I claim refund? I will just brief you that. Now, let's say example, I export goods to Singapore, let's say worth 10 crore rupees during the year. I do not have any domestic transaction. I do not sell or provide service within India. Everything is export. I export goods or export service. Now, to export goods, to manufacture these goods, I would have purchased a lot of raw materials, right? So when I'm purchasing those raw materials, the vendors will charge me GST. So let's say I purchase raw materials. Let's say example, I'm manufacturing a car. I'm manufacturing a car and I'm exporting my cars. So to manufacture a car, I would have purchased so many components, so many raw materials. I've received so many services. I would have purchased so many machineries in my factory to manufacture these items. Now, everyone would have charged me GST. Now, since on output, that means my sale, my export to Singapore, I'm not charging any GST because it is zero-rated supply. On my so many inward supplies, this GST will become a cost to me, and hence a demotivation for me to do exports. For that purpose, if you see all these inward supplies, I can claim input tax credit, because the SENVAT credit rules, the input tax credit rules, the input tax credit chapter 16 says I can claim input tax credit which are used for the purpose of business. But how will I claim my input when I do not have any output liability? Because I said on export there is zero tax. All I have is inward. So thereby blocking my working capital, blocking my cost. So that's the reason there is a provision called as refund. So now there is a lot of compliance in refund. When I export goods or services at zero rate, I have to apply refund for all my inward supplies. Again comes the role of an accountant or a chartered accountant. So I was beginning to understand that many are faculties or teachers in colleges. So I'm just trying to drive home the point that there's a lot of compliances which an accountant or a student, if he's pursuing a career as an accounts person, as a chartered accountant, has lot of scope in the GST law in future, or per se any other laws also, because we have multiple taxes like GST, income tax, companies, and multiple compliance as well. So now, when you are doing, in my case, when I'm doing an export of 10 crores, I have a lot of taxes being charged by vendors. No, I have to claim a refund for that. Applying refund is not so easy. I have to do a lot of computations and workings. Now, why there is a lot of compliance in claiming refund? Because there have been a lot of frauds which have been reported in exports. As I said, in newspaper, a lot of frauds are reported. One of the frauds which has been happening is export. What happens is, a lot of, some have done that they procured dummy invoices and they show fake exports and claim refund from the government, so thereby causing loss to the exchequer. So government has provided certain compliances and norms for claiming refund under GST to ensure that no person is claiming any fraudulent claim of refund from the government of India. So for refund, there are compliances, form prescribed, and various compliances to arrive at the refund, upload documents, and make compliances with the two-way receipt of payment, etc., etc. Various compliances are prescribed. Since our topic is restricted to forms and its importance, I'm not going in depth on the refund provisions. So just trying to make you understand what is refund all about and why there is a compliance in refund and why we need a form to apply refund in GST. So as I said, export of goods or service, one option, when I export goods or service, I might have to claim refund. Now, in that case, I can apply refund for inputs and input services, but not for capital goods, because capital goods is something like assets. When I manufacture goods, I will have to purchase machinery also. I will purchase raw materials also. Machineries will be classified as capital goods. For that, I cannot claim refund. But for input services, I can claim refund. Inputs means basically raw materials. Input services, example, auditor fees, accountant's fees, rental premises, so rent fees. So all these are service payments. On that also, GST will be charged by my vendor. Let's say example, I'm operating a factory and the lease rent is 1 lakh rupees. On that, the landlord will charge me 18,000 GST. So that also I can claim refund from the government. Next category of refund is inverted duty structure. Now, what is inverted duty structure? Let's take an example. Let's say example, my raw material is taxable at 18% and my output is taxable at 12%. So my raw material is taxed at a higher rate, 18%, but my finished product is taxable at only 12%. Now what is happening, since my raw material is taxed at a very high rate, I have a lot of accumulated input tax credit. Because let's say example, I purchase raw materials of 100 rupees and I sell for 150 rupees. Tax charge on my purchase is 18%, on my sale is only 12%. To set off, my input tax rate is always higher. So that also I can claim refund under inverted duty structure. So we have various refund mechanism in GST. In the slide, if you see my slide at present, my slide, in the refund portal, I've just put a snapshot here. There are various categories of refund, various categories under which I can apply a refund. Example, my cash ledger. See, in GST portal, we have electronic cash ledger, which is like my bank account. I can pay tax and keep in my cash ledger. Whenever I want to pay tax, I can utilize money from my cash ledger and adjust it through my liability. That is done through a form called as GSTR 3B, which we'll see in some time. So that is all in electronic cash ledger. Let's say example, I've deposited 10 lakh rupees. And later on, I feel I do not need the entire 10 lakh rupees now because my liability is only 2-3 lakh rupees. So I can claim refund of the excess amount lying in my cash ledger. So that is also a refund mechanism. Refund of ITC on export of goods. So likewise, we have various categories of applying refund, which is you can see in my slide. But the major two categories are export of goods or service or inverted duty structure. These are the major two structures where across India people apply refund. If you have read in newspaper, even during lockdown, government has refunded, cleared refunds amounting to thousands of crores to exporters. So for refund, related key forms. I'm just showing here. There are various forms like 1, 2, 3, 4, 5, 6, 7, etc. But I'm just showing you in my slide key forms. So RFD1 is a form where we make an application for refund. See, in this session, my main motive, given the limited time frame of 1 hour, my main motive is to drive home the point that what are the compliances and various category of forms and compliance linked to those forms are there in GST law to, you know, get home this point that so and so category of compliances are prescribed in GST. So GSTR RFD1 is an application for making refund. RFD2 is again an acknowledgement, and RFD6 is a sanction order, refund sanction or rejection order. Now, in refund also, there is no manual interference. Few months back, I repeat, few months back, when I apply refund, I have to go to the department, follow up for refunds. I have to submit a lot of manual documentation to the department to prove my genuineness of the transaction. So there was huge amount of work involved in refund. But recent few months, we are given an option to upload the documents. When you're filing refund claim, I repeat, when you're filing the form for refund claim, along with the form, you have a lot of documents to be uploaded. We can upload our invoices also. So a lot of forms are required to be uploaded, and hence the manual interference is very much reduced recently because of the amendments made by the government and the modification of the forms and giving the facility to upload a lot of documents. So as I said, applying refund involves a lot of time. It's a time-consuming task, doing the time workings, scanning the documents, uploading the refunds, and following up and getting the refund claims. And as I said, department exercises a lot of caution while sanctioning refunds under exports because, as I said, already there have been a lot of fraudulent cases being reported for exports. Just a small example, how fraudulent cases are reported. Let's say example, there is an A supplies fake invoice to B to C, and C shows a fake exports. Showing fake exports, he claimed refund for all the invoices he has received. Now, coming to the next category, which is ITC forms. What is ITC's? Input tax credit. Input tax credit also, there are certain forms prescribed. I repeat, these forms are not to be filed in the normal day-to-day course of business. These are required to be filed only on the happening of an event, which I will show in my next slide. So, in regular course, once you get registered, you have to file a registration form, get registered. Registration forms will apply. Thereafter, when you're doing business, you're doing any exports or inter-duty structure, you have to claim refunds, so refund forms will apply. Then, although monthly returns are there, when I'm doing business, every month I have to file returns. The returns I will come to in some time. But there is something called as ITC forms also, input tax credit, based on certain happening of the event. Now, if you see, there are major 4 forms in ITC, which I'm going to show now. If you see, the first form is ITC1, which is basically, let's say example, I'm a person whose turnover, let's say I'm dealing in goods, I'm trading in goods, and my turnover crosses 40 lakhs today. So I have to mandatorily get registered in the GST. My turnover crosses 40 lakhs, I will register. But I will have certain stock with me on the day of registration. And after registration, the closing stock which I have and which I will be selling to my customers, I will be charging GST. So on the sale of those goods, when I'm charging GST, on the purchase, I should have been allowed input tax credit. So this form allows me to claim ITC on those provisions. So ITC1 is that form. Similarly, we have ITC2 form. Let's say example, in case of takeover, merger of companies. Let's say example, my company is being taken over by another company. Then what my ITC, my input tax credit can be transferred to another company. For that, we have another form called as ITC2. So likewise, there are multiple forms in ITC as well. But as I said, these are not to be filed on a day-to-day course. Only on the happening of a certain event, this is to be filed. Similarly, we have ITC04, which is to be filed for job work transactions. What is job work? Let's say example, I'm an automobile company, I manufacture goods. Certain process of manufacture, I want to outsource to someone else. So I will outsource this process, and the opposite person works on this and gives back to me. This is basically called as a job work. Technically, there is a definition which is given in the GST law. Now, one more point. When I'm talking about registration, that my turnover crosses 40 lakhs and I'm dealing in goods, I have to mandatorily get registered. Here, what happens is, let's say example, my turnover is only 12 lakhs. I repeat, 12 lakhs. But still, can I get registered in the GST? Answer is yes. The law gives an option of voluntary registration also. So many taxpayers, even if the turnover is below the threshold, they will get a voluntary registration under GST. And once they get a voluntary registration, so all the forms, all the compliances will fall in the picture. They have to do monthly return filings, return filings under GST also. Why someone will do like that? Because no, to be compliant from the first day, to claim ITC, to show output, to my customers, and for my customers not to know that I am a small taxpayer. Because if I do not charge GST to my customers will know that my turnover is below 20 lakhs or 40 lakhs. So many reasons people take registration under GST, even voluntary, even before the turnover crosses the threshold limit. Now next comes to returns under GST. Now what are these returns under GST? We saw various forms like ITC forms, refund forms, registration forms. What are those main returns under GST? See, now these are returns through which we report our day-to-day transactions. I repeat, the returns, these GST returns, example GSTR 1, we have GSTR 3B, we have GSTR 4, 5, 6, 7. We have various return forms which are to be filed periodically, maybe monthly or maybe bi-monthly, maybe quarterly also. That I will discuss on my next slides. So in these returns, I report my day-to-day transactions. So just giving you a highlight of how many returns are there in GST. Then I will take you through in detail which are the main monthly returns which we file, because that is the main crux which we have to do day in and day out. Now, the various forms in returns in GSTR. GSTR 1. GSTR 1 is the return which we file on a monthly basis, where I report my monthly turnover invoice wise. So let's say example, in a month, I've issued, let's say total 500 invoices, 500 sale invoices. I've done 500 sales. So when I file my GSTR 1 for the month, when I file this return GSTR 1, I will report my transaction wise details in my filing GSTR 1. So all the 500 transactions invoice wise with my customer GST number, my customer name, invoice amount, tax amount, all these details I will furnish while I'm filing my GSTR 1. So basically in GSTR 1, we report only outward supplies, only sales part, no purchase part. Only sales is being furnished in GSTR 1. Now GSTR 1 is to be filed on a monthly basis. But however, for small taxpayers whose aggregate turnover is below 1.5 crores, the option is given to file on quarterly basis to reduce the compliance for small taxpayers. Coming to GSTR 2A. Now what is this GSTR 2A? Basically, GSTR 2 is a auto-populated return. GSTR 2A cannot be filed by you and me. We cannot file return. GSTR 2A is a auto-populated drafted return which is available in the portal. Now, what is this GSTR 2A? I will just take a couple of minutes to explain you this mechanism of filing returns in GST. See how it happens is, let's say I'm a supplier and you are my customer. I supply goods to you. So similarly, I have 500 customers to whom I supply goods. Now, when I supply goods to my 500 customers, I have 500 invoices for the month. So let's say for the month of January, I have 500 sale invoices. For the month of January, this GSTR 1 I will file by 11th of February. When I file my return by 11th of February, I will report all my 500 transactions invoice wise with the GST number of all my customers. Now, when I file my GST return GSTR 1, all my 500 customers, if you are my customer, all 500 customers will be able to see in the GSTR 2A. GSTR 2 is a auto-populated, and as I said, you need not file anything. In your GSTN login, you can view this GSTR 2A and you can see that I, as your supplier, have filed my GSTR 1 and have reported your transaction in your GSTR 1. Now, someone can ask me why this GSTR 2 is required. I will come to that in detail in some time to explain you the essence of this return of GSTR 2A. So in my example, I will file my GSTR 1 reporting all the 500 transactions, and all my 500 customers can view in the GSTR 2A that yes, I Sumit as a supplier to you have filed my GSTR 1 and duly reported the sale made to you. Now, so you will see in your GSTR 2A, yes, Sumit has shown me a transaction and the credit reflects to you in GSTR 2A, input tax credit, because whatever tax I charged to you, you can claim as an input tax credit. Now, monthly return. There's another monthly return which is called as GSTR 3B. Now in GSTR 3B is a monthly return whereby we report monthly transactions as a summary. I will show you that also, what are the forms. I will take you in detail also what are the tables which are seeking details. So in GSTR 3B, I will report my total summary of total sales, not invoice wise, no invoice wise. Total summary of outward transactions. Let's say my turnover is 50 crores. So total 50 crores. Input tax credit. So if 50 crores liabilities, let's say example 8 crores. My input tax credit, let's say example 5 crores. Total ITC I will report. Total liability I will report. Net tax payable 3 crores, which I will pay to my cash ledger or credit ledger. Adjust in 3B and submit the return. So GSTR 3B is like a challan. I will report my summary of total liability, total ITC, net tax, pay the tax, and file my return of GSTR 3B. So now, GSTR 3B is also to be filed on a monthly basis. Here, there is no option to file on quarterly basis. I repeat, even if my turnover is below 1.5 crores, I have to still file it on monthly basis. Although there is different for composition dealers. The composition dealers have been kept separately. Now, next is GSTR 4. Now, earlier this was a quarterly return to be filed by composition dealers, but now it is an annual return to be filed by composition taxpayers. Now, GSTR 5 is to be filed by non-resident taxable persons. This is not for Indian residents. This is for non-resident taxable persons. There is a separate form prescribed GSTR 5. Similarly, we have other forms like GSTR 6, which is for ISD, which is called as Input Service Distributor. Now, what is ISDs? Let's say example, I have an head office in Chennai. I have branches. Let's say example, Ashok Leland. Just an example. I have a head office in Chennai. I have branch in Bangalore, Mumbai, and Mumbai, Bangalore, and let's say Kerala. If I have branches in 3 states and I receive a lot of supplies in my Chennai, because I'm a head office, I enter into a contracts with my various vendors. These supplies might be related to my other branches. So I have to distribute credit to the respective branch because I cannot avail credit of other branch in my head office registration. So I will distribute credit to ISD. So that is a separate form to be filed for distributing credit, which is called as for GSTR 6. Similarly, we have GSTR 7 for TDS transactions. See, just like we have TDS tax deducted at source in income tax, similarly we have TDS in GST also, which is basically for government-related companies, public sector undertakings, etc. GSTR 8 is statement for tax collected at source. Example, e-commerce operators. If I supply goods to Flipkart, or let's say example, Amazon, they will collect TCS from me, tax collected at source. So for that, they will have to file a return in form GSTR 8. Similarly, we have GSTR 9. GSTR 9 and 9C I will come in few minutes. After I complete these returns, I will come to 9C and show you what are those forms. And there is another return called as GSTR 10. Even after I close my business, there is a return to be filed GSTR 10 to report my closing stock about my closure of business. Within 3 months of the closure of business, I have to file another form. So you can see in my slide that there are various returns to be filed in GST, thereby causing increase in compliances. Now, I will take you through in detail on 3 aspects. One is GSTR 1, GSTR 3B and 2A, because these are dealt by all of us on a day-to-day basis who are registered under GST or doing compliances under GST, or those who are in the accounting field, because these are to be reported on a monthly basis. As I said, GSTR 1 is for sales transaction outward supplies, GSTR 3B is a consolidated return, and GSTR 2 is a viewable return where I can see which of the supplies are paid tax. Now, as I said, I will come in some time. Why is 2A required? See, I gave an example that I supply goods to you and I file my GSTR 1. You see in my 3, you see in your GSTR 2A that I have given credit to you. In few minutes, I will show you there is a rule, specific rule which is inserted, because of which 2A becomes a mandatory provision for you to claim input tax credit. I repeat, if I do not file my GSTR 1 and the credit tax does not reflect as a customer to your GSTR 2A, you will not be able to claim input tax credit in your GSTR 3B. I said no, in GSTR 3B, total output tax, total ITC, net tax you have to pay. But if I do not file my GSTR 1, you might be restricted to claim input tax credit, which I will show in some time. Now, who should file these returns of GSTR1 or 3B? As I already said, there are about 1.2 crore taxpayers registered in GST. So all those taxpayers who are registered have to file their returns. If their composition separate, or other than that, they will have to file GSTR1 or GSTR3B. Every registered person is required to file GST returns. I repeat, every registered person. And I said registration is required once you cross the threshold limit. But even if you do not cross the threshold, you have a voluntary registration option. In that case, even if your threshold does not cross, you can take a voluntary registration. If you do not file return on time, there comes interest liability at the rate of 18%. If you report your tax returns late, GSTR 3B is delayed, you have to pay interest at the rate of 18% on your liability. And also there is a late filing fees per day in case of filing your returns late. 50 rupees per day is a late filing fees. So filing returns on time becomes of prime importance, because if you delay, there's an interest and a late filing fees. And hence, people, corporates, taxpayers gives very much importance to their GST compliance, because for every non-compliance, there is a consequence, there's an interest, there's a penalty. Who is required to register? I will not speak much about it, because my good friend in the earlier session has spoken who is required to get registered, what is the threshold, etc. Now, what are the major features of these GST returns? GST returns are online and paperless compliance. As I said, we need not go to the department to submit a return. It's all online. In the earlier central excise regime, whenever you file a return, central excise manufacturer, whenever you file a return, the purchase summary, the summaries we used to attach with the return and submit to the department physically. There was a physical intervention. But in GST, there is no physical intervention. It is all online. Whether you talk registration, whether you talk refund, whether you talk ITC forms, and whether you talk monthly GST forms, all are online and paperless. Next, input is eligible only if supplier pays tax. I said my supplier should file GSTR1. There's another provision, section 16.2, which says, there's a section in GST law which says, only if my supplier pays tax, I can claim input tax credit. So the supplier who has charged me tax on his invoice, I am claiming credit of the tax charged. But until unless he pays to the government, the GST department can disallow my input tax credit, can debar, can restrict my input tax credit. Return can be filed only after payment of GST liability. See, this is one important feature, because in earlier regime, example service tax law, we had the option to file return without payment of tax. So in the earlier regime, we had option like that. But in GST law, if you want to file your GSTR 3B return, which is a monthly return reporting your tax liability, you cannot file that return until unless you pay the tax. So because of which, what is happening? Let's say example, I want to file my return for the month of, let's say, June. For filing June month return, the due date is 20th July. Now, to filing this return, I have to pay tax. Let's say example, because of this COVID-19 pandemic, I'm not having circulation in my business, no funds available, I cannot file my GSTR 3B. Only if I pay tax to the government, only after that I can file my return, because in GSTR 3B, without filing, the return will be treated as an invalid return. So payment of tax becomes a mandatory feature. Return once filed cannot be reversed. As I said, in GST, the returns cannot be revised, although I can make an amendment. So let's say once I file a return, let's say example for the month of January, I submit a return, GST return of GSTR1 or GSTR3B. Once I submit a return, I cannot revise that return. I repeat, once I submit a return, I lose the option of revising the return. So only I said we have to be very careful and exercise caution by filing return, and thereby businesses hire a professional or outsource to experienced accountants to file their GST returns, because returns cannot be revised in GST. Now, what if I report a transactions incorrectly in my GST returns? In that case, in the subsequent month, I can make a rectification. I repeat, if I do a mistake in my filing GST returns, I can make a rectification the next month return. In GSTR1 return, there's a separate table given for amendments. I repeat, for amendments. So let's say example, for the month of January 2020, I file a return, doing a mistake in my return. Let's say example, I sold goods to Mr. X, and by mistake, I report in the name of Mr. Y. In the subsequent month return, in the amendment table, I can make a rectification. So there's a possibility of rectification, but no revision. Now, the last point what I'm trying to say is organized businesses will stand to benefit in GST, because In GST, if we do not file returns on time, we do not comply, we are not compliant, there is no customer who would like to do business with us, because, as I said, if I do not file my returns on time, it will not reflect in the GST 2A of my customer, and hence he will not be able to claim credit, and thereby he will stop my payment. So only I said these returns are having a lot of important features, a lot of compliances attached to it, and hence becomes important that we do timely compliance and give high importance to the compliances in GST. Now, we have GSTR1, 3B and 2A as a wholesome picture for all the taxable people. Now, the government has said that, my good friend Shankar in the previous session said that the new proposed forms like Annex 1, Annex 2. So recently the government said we are going to do away with the new forms. The new forms Annex 1, Annex 2 are being dropped by the government, and they've said recently that we are going to modify the existing forms. And in the modification, they are saying that we will link all the forms of GSTR1, 3B, 2A, and they're bringing a new form which is called as GSTR2B. So it's an additional compliance which is coming in. Now these forms will be all linked in. Now, earlier when you file returns, GSTR3B is not auto-populated. We have to manually fill our figures. After that, modifications which is expected to happen in the month of October, this modification, new proposed modified returns are expected from October. So what will happen is GSTR3B, GSTR1, 2A and 2B will get linked. What is 2B? ITC will flow in my 2A, from that it will go to 2B, and from 2B it will get auto-populated in 3B. We are yet to have the final format from the government of 2B, which is expected to be released shortly. So the existing returns are further getting modified to prevent fraudulent practices from October month. As I said, there have been a lot of frauds which are reported in GST. So government is trying to link my input tax credit, output tax, etc., to reduce the evasion of GST. Now, there is a rule which I wanted to highlight, which you have to keep in mind while filing GST returns, which is Rule 36.4. That only says that if my supplier does not file my GSTR1 and the credit does not reflect in my 2A, I cannot take this credit. I'm not going to detail in this return, in this rule, because my intention is just to cover the returns part, the forms part, just to show how this will make an impact in my returns and forms in GST. So until unless my supplier files return, it does not reflect in my 2A, I cannot take ITC, thereby increasing compliance. As I said, right, there are 2 accountants prior to GST. Now it has increased to 4 or 3 or 5 because of these reasons. Every time I have to keep reconciling my 2A to see who has filed, who has not filed, which of my vendor are compliant, which are not compliant, and I have to keep following my vendors to ensure that they file returns so that my credit becomes eligible to me. There is something called as e-way bill. I have to, when I'm moving goods from one place to another, when I'm supplying goods to my customers, I have to generate a form called as e-way. So additional compliance again to generate a form. I file return GSTR1, GSTR3B. So I have to do a compliance monthly reconciliation whether my forms are matching. Again, I have to do that reconciliation with my books of accounts and that with my financial statements. So multiple reconciliations are required, multiple follow-ups, timely basis are required in GST law, and hence increase in compliance. Although government is making multiple efforts to ease the compliance of GST, but as I said, India is a vast country. We have huge number of taxpayers, so it will take little time for the government to slowly ease down the compliances in GST. Now this is how the portal looks. I've just taken a snapshot of the portal. If you say log in the portal, we have GSTR1, 2A, which is auto graph of details, and right hand side, if you see, there is a monthly return which is called as GSTR3B. So in GSTR1, this again a snapshot how it appears GSTR1 when you log in. So there are various tables. I can report my B2C transactions, B2B transactions. What is B2B, B2C? If a customer is registered under GST, it is called as B2B, business to business. If my customer is not registered in GST, it becomes a B2C transaction, business to customer. Let's say example, a restaurant. In a restaurant, when we go and eat food, restaurant does B2C transaction because all are end customers. So B2B, B2C are reported separately. My export transactions have to report separately. Export of goods, I said, right? Because export, there is something called as refund, extra provisions applicable. In exports are treated as 0 rate. To export has to be reported separately. There is another table 9, which I said there is an amendment table to make any amendments. If I want, if I have made some mistakes in my previous month return, I can make an amendments. For various amendments, there is a time limit. There's a time limit, which I'll come in some time. Yeah, okay. So which I'll come in some time. There's a time limit that, let's say, example, financial year 1920. If I want to make any amendment pertaining to my financial year 1920, I can make only up to the return of September 2020. I repeat, for 1920, if I want to make any amendment, any rectification, any correction, then I can make only up to September 2019 20 return. 6 months basically government has given me to rectify my mistakes which I have done, to raise credit note. So there are provisions which has a timely compliance to be done. Solely I said we have to give a lot of importance in GST, because either we might lose input tax credit, or we might do some mistakes which we might lose the benefit of rectifying those mistakes. Now in GST returns, we have another column which reports about tax on advance received. See, in GST, if I'm a service provider, if I provide service, even on advance received, I have to pay tax to the government. So there is a separate table 11 to be reported, where I have received advance and I have to pay tax. So there are different tables in GST. Another table is table 12, which is talking about HSN summary. See, there is something called as classification. Example, you and me are known by our names. Let's say I'm known by my name Sumit. Everyone has a distinct identity. Similarly, in the GST law, in the indirect tax laws, we have a separate distinct number classification assigned to every goods or every service. So let's say, example, I'm doing a construction service, a works contract service. I have a code which is 9954. So every service or goods has a unique code that also has to be reported in my GST returns. So there is specific code, unique codes which have to be reported. Yeah. Now let me come to my GSTR 3B return. So I spoke about GSTR 1. In GSTR 3B, as I said, we have to report summary of total outward supplies, summary of total input tax credit, net tax payable, paid tax, and file the return. GSTR 3B, as I said, we do not report anything invoice level. We have to only report consolidated amounts. As the law stands today, nowhere we report invoice level purchase transactions, inward transactions. Outward transaction, my sales, I report in GSTR 1 invoice wise. Similarly, GSTR 3B, I report summary of outward, summary of inward, my purchases. But invoice level purchases, I do not report. That I have to reconcile manually between my books of accounts and GSTR 2A. So GSTR 3B appears like this. This is a snapshot which I've taken. There are various tables like 3.1 which talks about tax on outward and reverse charge supplies. What is reverse charge? See, there's a tax liability on reverse charge also. If I supply goods to you, if I sell goods to you, if I provide service to you, when I provide service to you, I will charge GST to you and collect from you and pay to the government. In case of reverse charge, the name itself denotes the charge is reversed. So if I am providing a service to you, I will not charge GST to you, but as a customer, you will pay GST under reverse charge to the government directly. I repeat, under reverse charge transactions, I am the provider, you are the receiver. Generally, I will charge tax. In case of reverse charge, I will not charge. You will pay tax directly to government. And hence, reverse charge requires additional compliance, because in books, you have to take care, abundant care that you do not miss tax. Now, on what transactions reverse charge is applicable? There is a separate notification which is notified. There are so-and-so transactions on which reverse charge is applicable. On normal day-to-day transactions, it's all forward charge. That means supplier will charge, but only in specified transactions, reverse charge is applicable. Then eligible ITC. What total ITC? Let's say, example, I have total CGST liability, ITC, SGST, IGST. So total ITC, total liability, net tax to be computed. So this is the table 3.1 of GST 3B. This is how it looks from the portal. I've taken a snapshot to give a feel of how it looks GST 3B, because this is one of the very important form which we find on a monthly basis. So if you see, this table records my total gross liability. If you see the first, outward taxable supplies. Next, it talks about only zero rated supplies. I already said zero rated means my export transactions or supply to an SEZ. Third is nil rated exempted. What is exempt? See, their transactions are exempt. Let's say, example, educational services are exempt in GST. Healthcare services, hospital, healthcare services are exempt in GST. Residential rent, if I collect rent from a residential rent, exempt in GST. So there are certain transactions which the government has kept exempted in GST. That means there is no GST applicable. That also has to be reported separately. Then there is inward supplies on which I have to pay tax under reverse charge to be reported separately. Then non-GST supplies. Non-GST is basically supply of alcohol, liquor, etc. So these to be reported separately on a consolidated basis. Consolidated basis, item wise, I have to report. So these transactions have to be accounted separately in my tally, my books of accounts. My books of accounts should be structured in such a way that I should be able to take these reports. And hence, accounts becomes very important. How I'm accounting my books of accounts becomes, how I'm maintaining my books of accounts becomes very important. And there comes the role of an accountant. So we have to be careful how we are structuring our GSTR, books of accounts, because many softwares, if you do proper accounting, you can take ready-made reports and you can file returns directly. I repeat, if you maintain your accounting properly, you can link with the GST and file your returns directly. You can take ready-made reports. So accounting becomes very important in GST law. If you maintain category-wise, you can easily take out various reports. Similarly, this table we are talking about eligible ITC, where total ITC is reported in this GST 3B. Only major two tables in 3B. One is for total liability. This table is for total ITC. Here also, if you see in my slide, we report category wise. First is import of goods. If I import goods from outside the country, I import any goods, I purchase goods, I pay custom duty, I pay also IGST. So IGST I can take credit, so that has to be reported here. So only if you see my slide, in case of import of goods, import of services, CGST, SGST columns are not enabled. Only IGST is enabled, because in import transactions only IGST will be applicable. So import of goods separately to be reported, import of services to be separately reported, ISD, reverse charge, all other ITC. So category wise, I have to report my input tax credit. Then comes the net liability. I have to pay my tax and file my return. Now, there are various reconciliations to be done in GST. For filing returns, if I'm filing returns, I already highlighted, but just to again mention, my GSTR 1 3B reconciliations, my 3B and 2A reconciliations, my 3B1 versus books reconciliations, my GSTR1, my sales with e-way bill data reconciliations to ensure that I have not missed any e-way bill. Multiple reconciliations. Every businessman who is registered in GST has to maintain on day-to-day basis. So various reconciliations which are prescribed are to be done by every business SSE. On the last part, I have just come on my last part of the discussion, last part of the major forms. The last part is annual forms. So we spoke in detail about registration forms, refund forms, ITC forms, and monthly GST return filing forms. Now the last part is annual forms. So major two forms I'm going to talk about is GSTR 9 and GSTR 9C. Every business SSE who is registered under GST and whose turnover is crossing 2 crores, I repeat, every taxpayer who is registered under GST had to file annual return on an annual basis. In annual return, we have to report consolidated transactions. Let's say example, during the year, total B2C transactions, total B2C transactions, total exports, total ITC under category to be reported. Total summary return to be filed on an annual basis. Now, it was to be filed for every taxpayer, every registered person. The government has given a relief, and they've said if a turnover is up to 2 crores, annual return is not required to be filed. Only about 2 crores, every taxpayer aggregate turnover is about 2 crores, annual return will be filed. So this is another additional compliance to be complied by taxpayers whose turnover is more than 2 crores. So annual return, annual figures. So every month, reconciliation to be done. Total figures to be reported in this GSTR1. It's a detailed form giving various tables for ITC, reverse charge, outward supplies, export transactions, HSN summary, which I said classification, etc. So again, another scope of work for accountants or chartered accountants. GSTR 9, there is no requirement of a chartered accountant or cost accountant. GSTR 9 can be filed by an accountant or by a taxpayer themselves. For GSTR 9, I repeat, there is no certification of an auditor required. Now, there is another something called as GSTR 9C, which is called as GST audit report. GSTR 9, as I said, there is no certification required. The taxpayers can report in the detailed format their transactions, submit the return. Now, there is something called as GST audit report. What is this audit report? A taxpayer, has to get this audit report done by a chartered accountant or a cost accountant mandatory, because they have to certify with their signature. They have to certify this report stating that GST compliance are done properly by the taxpayer. So this is basically reconciling the GST annual return with the financial statements. An auditor has to check, a chartered accountant or cost accountant has to check. See, the financial statements, in audited financial statements, I have reported turnover of 60 crores. So a chartered accountant will check whether on all 60 crores the taxpayer has paid the entire tax liability or not. Whether in any transaction the taxpayer has missed to pay tax. If missed out, that the auditor has to ask the taxpayer to pay tax on the transaction. Example: the taxpayer has taken any ineligible credit by mistake. A taxpayer has taken a wrong credit. So in this GST 9C, the chartered accountant has to reconcile input tax rate also and ask the taxpayer to reverse the credit. So in GSTR 9C report, which is GSTR audit report, an auditor has to check, reconcile with the books of accounts to ensure that compliances of GST are complied by the taxpayer. Now, this form was required mandatory by all taxpayers who aggregate turnover is more than 2 crores. I repeat, more than 2 crores. But now government has relaxed this because GST law is little new, 3 years only. No, lot of taxpayers are facing hardships. So government has eased out. They've said up to 5 crores GST audit report is not required. Above 5 crores it becomes mandatory. So which is by form 9C. Done. So with this, I've come to the end of my presentation. I've spoken in detail about various forms in GST and various scope which is lying for all of us, whether I'm a chartered accountant or I'm an accountant or I'm a cost accountant. There are various benefits available. So many times what happens is college students think that chartered accountant is a cumbersome course. They try, but I'm saying you should try chartered accountancy course definitely, because there's a huge scope of work in future for all of us. But in case if someone is unable to pursue chartered accountancy course, they can still plan. There is a career to be an accountant, because I've just took you through briefly on the various compliances which we have in GST, which every businesses has to comply. So there is even a lot of scope, work scope for even accountants in GST regime. Yes. So with this, I will. Yes, sir. So over to you, sir. So with this, I'm coming to the conclusion of my session. Yes, sir. And I would like to thank the Karpagam Institute, Coimbatore branch of ICAI, and Jalapati sir for giving this opportunity and addressing all of you. Thank you. Over to you, sir.
Thank you, sir. Thank you, Sumit, for the excellent presentation as usual. So I hope faculties would have enjoyed your session. So we are getting a lot of good feedback. So for both the speakers, thank you so much. But faculties, any queries or doubts, you can post in chat box. Maybe another 5 minutes, 5 to 10 minutes, we can discuss any questions. Sagara, sir,
Yes,
can
sir.
you able to see the question? Elaborate highlight of GST in just.
Okay. Highlight
I
of
think
G.
that is a feedback someone has given, I think.
Yes.
Okay. I think there is no questions. Okay, we'll close this session, sir.
Fine, sir.
Okay, sir.
I request Madam Dr. V. Krishnavani propose vote of thanks for the speaker.
Yes, sir. Good evening to one and all present here. First of all, I thank God Almighty. I would like to express my thanks to our management hierarchies who have given me this opportunity to stand before you. On behalf of the Department of Commerce and Karpagam Academy of Higher Education, I would like to propose a vote of thanks to each and everyone who have contributed for the overwhelming success of today's program. I would like to thank our Honorable Chancellor, Trustee, Vice Chancellor, Chief Executive Officer, Registrar, Controller of Examinations, Dean, HOD Dr. K. Jyoti and Dr. A. Dharmaraj, FDP Coordinator. I would like to thank our chief guest, C.A. Sankaran Narayanan sir, who have given an inspirational talk to all of us. Thank you, sir. I would like to express my deepest gratitude to our chief guest, C.A. Sumit Kedia sir. In spite of his busy schedule, accepted our invitation without any hesitation and has come here to this faculty development program and has given many valuable suggestions which are needed to our day-to-day life. Thank you, sir. I also thank CA K. Jalapati sir, Vice Chairman SARC for creating an opportunity to conduct this faculty development program with our institution. Thank you, sir. Last but not least, I would like to thank all our participants for spending their valuable time and making this faculty development program as a successful one. Thank you, sir.
Thank you, madam. Sankaran sir, though we have completed a vote of thanks, just still for the benefit of faculties, we can address the two questions, sir. Only the two questions. One is, I think, display you can able to see.
Sumit, filing.
Okay. Yes. So the question is, why can't filing be, used user friendly for small businesses instead of outsourcing it? Yes. So rightly said. See, the intention of the government was definitely to make it user friendly. But if you see, as I said, what has happened is, whenever there is a compliance, there will be a lot of, like my good friend Shakananan said in the beginning, that there were only 60 lakh taxpayers earlier, which has increased to 1.2 crores taxpayers. So probably he hinted a point that maybe many were those who were earlier also liable, but did not register and registered at a later date. See, whenever there is some compliance, there is something called as tax evasion also on the other hand. So government want to ensure that government is getting maximum data from the taxpayers. And especially in GST, we have a lot of fraudulent practices being reported. So what happens is government wants to have a detailed returns so that the government is getting maximum data from the taxpayers. And in that process, the return becomes little cumbersome, or maybe you can call it little complicated. And as I said, the government is planning even to modify the existing returns and make it little more automative, so that a lot of data government is able to gather from these things. As I said, majorly government wants to get maximum data and to avoid fraudulent practices. In that process, it becomes a little detailed format or a little complex for taxpayers. See, other countries like US, etc., it's a very simple form. If you see example in US, they file a very simple form on a quarterly basis where they report total output, total input. They do not report any invoice-wise details, because there it is assumed that every taxpayer is an honest taxpayer. Everyone is complying their provisions correctly. My brother-in-law in US, when I discuss with him the compliance we have in GST, he generally gets shocked, because there they do not bother about the GST compliance at all. So since here there is a lot of tax evasion, government wants to have a detailed procedure for the filing mechanism. Maybe down the line, after 5 years, 10 years, we might have complete simplified forms like the developed countries, hopefully.
Absolutely. I think the other question, why not GST implement on all sectors? The initial discussion that I had in terms of the constitutional challenges, I think that is where it goes back to. Specifically, if you see the petroleum products and the real estate, I would say only in terms of the land-related transactions, and the alcoholic liquor for human consumption. These are kept away from the GST for different reasons. For example, in case of alcohol, it is in the state list. It is for the state to decide from a state's perspective whether the state government wants to make revenue out of alcohol or not. So that is a bigger decision than to just tax it. So that is one. And when it comes to land-related taxation, stamp duty. So where the state governments, if they come together and say, yes, we will take it under GST, they should ideally be taking it. And if you had seen the economic advisor to the government, I think January 2018, before the budget, he had given a speech, Arvind Subramanian, where he had also hinted that real estate, the land transaction should also be brought under GST. Then collectively what it would do is the parallel economy. Mr. Praveen Nayak's question is also getting answered here, which is what is the overall impact of GST? The overall impact of GST on the economy and the employment is what it has done. One, the parallel economy of the cash, which is, I will not say that it has completely been wiped off, but it has been reduced to a greater extent. That reduction is the major change that I would say GST has brought in. As the numbers suggested, the tax base of earlier 58 lakhs has become 1.23 crores. Not without those people who were earlier doing it in cash were forced to come into GST's realm. And GST is giving the leeway for income tax also to find out from these people whether they are paying income tax. So that is the connectivity with which the tax augmentation in terms of revenue has happened, which naturally will have to be reinvested by the government in the infrastructure. I think that is the overall impact on the economy. Can I see it one-to-one? That may not be possible, because for any taxation that cannot be one-to-one. But overall revenue augmentation, overall collection of revenue, lack of leakage, yes, it has become much more stable in the GST regime is what I would say. Why GST is not applicable for petrol? It is available in the law. It has not been notified. So they have created the provision. The headroom is there. They just have to notify it, which I believe the states, once they decide, I think it is a matter of a notification. It should see the light of the day any point in time. The impact on Indian economy, I think I've already explained on that point. Sumit, your question?
I have purchased a product for rupees 1,50,000, including GST of rupees 25,000. I paid the price and received the goods. I have not received the bill till date. What shall I do now? Okay, so sir, now you have purchased goods, but you have not received the invoice. And if you see section 16.2, there is a section in GST law which says if you do not receive a valid document, you cannot take input tax credit. See, only thing is you have to follow your supplier, because if he has charged you GST and if he's a genuine taxpayer, definitely he will issue invoice to you. If someone is not issuing an invoice to you, only to my knowledge, probably he has collected tax from you as his intention is not to pay to the government. So that could only be the possible intention why a person has not issued invoice to you. If you know his GST number, probably you can write a letter to his GST range office stating that someone has supplied goods to me and charged tax to me, collected tax from me, but is not remitting to the government. So if the officer feels, he might investigate that case, because as I said, if he's collected GST, probably he should pay, and there is no reason why he will hold the invoice from you. But on the other side, if his intention is wrong to collect and not to pay, you can write a letter. If you have a GST number, check his range office where he belongs to. Just write a letter. Probably maybe some action might happen.
True.
But definitely will be ineligible to take credit in absence of the invoice. Yes, Shankar.
Absolutely. And you are being a B2C person, then all the more reason why there is no credit mechanism flowing to you. All we can do is, as Sumit said, only a grievance is the maximum thing. And that is where I told you the e-invoicing is going to change the game, where we will be able to report when we are not receiving an invoice, or when we receive an invoice, the genuinity, credibility of it can be checked. The next question is from Ammani Ammal, where she is asking, is GST aiming for revenue generation? Why exporters are exempted? I want to address it from a even finer aspect, madam. It is not exempted. It is called zero rated. Now, why would I zero rate some transaction? Is because look at what the exporters are doing for the country. The tax is a revenue which is collected from people within the country. But if the government is collecting revenue from those people, is the government really making revenue? Because tax is actually a zero-sum game. I'll take a minute of an example called as, in economics, we would have all studied in +1. It is called as velocity of money. A father has 2 sons. He is giving them 10 tender coconuts each and telling them that please go and sell it in the market at 5 rupees. Because when I studied, it was 5 rupees per tender coconut. So he's asking them to sell it in the market, 10 to the elder brother, 10 to the younger brother. As they are going to the market, the father gives 5 rupees to the elder brother and says, if you want anything to eat, you feel hungry or thirsty, give it to the shopkeeper, buy and eat. As they are going, the elder brother thinks, if I sell this tender coconut to a third party, he will give me 5 rupees. But I now have 5 rupees. Why don't I give this 5 rupees to the younger brother? Take 1 tender coconut from him and finish my thirst and hunger. He does it. Now, younger brother has 5 rupees. He now has thirst and hunger. So he gives 5 rupees to the elder brother, takes 1 tender coconut and finishes it. By the time they reach the market, they do it repeatedly, 10 and 10, 20 times. They will be left with 5 rupees. there will not be a single rupee of revenue the father will have. Assume here the father is Reserve Bank of India. These two brothers are you and me. How much so ever transaction we do between ourselves and how much so ever tax is collected on that, not a single rupee of revenue will be generated out of it. So for a government perspective, there is no word called revenue. Though they are using it as a terminology, it is not revenue. It is only inflow. They receive it and they are supposed to pump it back into the economy. Now, what happens when case of export? Why the exporters are given a higher pedestal is because they earn something called as foreign exchange. The exporter of goods or exporter of services earn foreign exchange. When they earn that foreign exchange, that becomes the basis for strengthening our economy, the balance of trade. The economy's strength increases because of that. That is the reason why the exporters are not exempted. They are being called as zero rated. And they are given the benefit of one, not levying tax on their exports. Two, they are even being given a refund of taxes that have been paid by them, only to encourage exports. Why? Because to make the Indian products competitive in the international market. If I levy tax and make it a costly product in the international arena, how will I get customers? So these are the economics that are behind this taxation. You want to add anything, Sumit?
Perfect. I like the coconut example.
That is the economics example which I studied in 11th standard. What is the basic need for people, diamonds, jewelry, or food? Why diamonds and jewelry impose less percentage than basic products? It is not about basic products. It is about the taxability of those products in the prior regime. To be very specific, in the GST Council meeting before implementation of GST, where they were finalizing on the rates, Kerala is one of the states where most of this diamond jewelry and related businesses are happening. They were taxing it at 1% in their state. So when there was a common agenda to push it to 5%, they immediately said we cannot have GST because what is currently being taxed at 1%, why do you want to bring it to 5%? So then there was a consensus building activity through which they finally decided that we will fix it at 3%. Had everybody agreed for one rate, we would have had only 18% in India, or maybe even lesser, 15 or 12%. Since something has to be 3, something has to be 5, so the 18 cannot be the top rate. They have to push something to 28. So the elongation of the list of rates happened because some people wanted something to be taxed at a lower rate. I think that is the reason why it is taxed at a lower rate. And there also you'll have to appreciate that it is a bullion metal. There is not much goes in terms of manufacturing or any value addition into it. That is why the taxability, the tax rate also on that is also lesser. That is the history why it is being taxed at a lower rate. Is our GST slab rate highest and lowest feasible compared to world countries? It is not just the tax.
With these questions, we will wind up this session, sir. With this
Right. Okay. So the tax rates are not the only measure of how the taxes or the revenue collection is happening. The economy as well as the inflation rate that is prevailing in a country. For example, if I tell you that in US, you keep your money in FD, the maximum interest they will give you is 1.25%. But you are able to make not lesser than 7% in India. So why would that differential be there? It is because of the inflation also that happens and the purchasing power of the money, the currency in your country. So if you look at the rate perspective, you just want to compare on a wholesome basis. The rate was Brazil has the highest rates in terms of taxation in GST. India has got 28%. Now this 28% is it high or low? I wouldn't comment on that, but was it higher than what was there earlier? No. As I had told in my example, 12.5% excise duty, 14.5% VAT was what was being paid. Collectively 27% if you roughly add it up, but it will not be 27 because on the 12.5 also this 14.5 had to be paid. So it came to 28 and that is where we are now. So there is no change in terms of higher rates in GST. It is only rationalization that has happened in GST. I would say in that context, it is not higher rate. It is the same rates at which the business was happening from 1991 till 2017. The same rates are continued in GST also. Yes, sir. I think we have.
Yes, sir.
Stop here.
Thank you, sir. Thank you, Sumit. We had a wonderful session. A great session. Thank you so much for both of you. Thank you.
Thank you very much.
Thank you, sir. Thank you very much, sir.
For your informative session. And I invite all participants are requested to be on time tomorrow evening by Monday evening, 6 o'clock. Thank you all. Good night. Thank you, sir.
Thank you, sir. Thank you. Thank you. Thank you.
Thank you, sir. Thank you.